The Starbucks stock appears to have bottomed out, especially now that in China, about 95% of the Starbucks locations have reopened. To top that off, Starbucks has also decided to lure some customers back with some of their alt menu surprises: alt milk superstar Oatly and the alt meat superstar Beyond Meat. Personally, when I first invested in Starbucks, it was because I wanted to actually get exposure to real estate. Starbucks owns the hottest spots in every town. And of course, so does McDonald's, which is one of Starbucks' main competition. On March 3rd, 2020, I covered the Starbucks stocks for our premium investing group members, or the PIG members. And I said that despite the near-term COVID-19 challenges that Starbucks faces because people cannot go to the stores, I believe that the Starbucks foundation for long-term growth will probably not change. And I suggested setting buy limit orders at price levels 71 and 65. I said that on March 3rd when the price was at around $80. And of course, Starbucks actually saw a brief drop below these levels, but now it's back up. So today I'd like to conduct my Invest Diva Diamond Analysis, or the IDDA analysis, on the Starbucks stock to see where it could go from here, what type of investors should consider Starbucks for their portfolio, and whether or not we could see another crash. As you know, the Invest Diva Diamond Analysis analyzes the markets from 5 different points: technicals, fundamentals, market sentiment, risk management, and overall, to see if it fits your portfolio. Disclaimer: Starbucks is not among my top 10 must-have lists, but I have continued to invest in it in the past 6 years. For those of you who are new to my channel, my name is Kiana Danial. I'm the founder of the Invest Diva movement. My mission is to empower moms to take control of their financial future and make their money work for them, even if they're not math whizzes. I publish new videos every single day, so make sure to hit that subscribe button and like and share this video with your family and friends, whoever who can benefit from this. If you'd like to learn my strategies and how I do these things, please open a new tab right now and go to learn.investdiva.com/yes. You can watch that presentation after this video. I'll also add the link to the description area of this video. Now let's go dive into analyzing the Starbucks stock for the remaining of 2020. Today, I'm going to focus less on the fundamentals and more on technical analysis and market sentiment. As you can see, this is what I wrote on March 3rd about the BL, the buy limit order ideas. As you can see, it actually briefly dipped below it, and now we have a solid bullish indication. This is the Ichimoku cloud, and the price of Starbucks has just broken above it. On top of that, the Tenkan line and the Kijun line have had a crossover. We are only lacking the third Ichimoku signal, which is having the lagging line break above the Ichimoku cloud. This is on the daily chart. And normally what happens when we have a break above the Ichimoku cloud is that we see a little bit of a momentum, bullish momentum, and then we see a pullback towards the upper band of the Ichimoku cloud. And for those of you who would like to add Starbucks but don't want to pay a premium price for it, you could wait a little bit for the prices to go back down to the upper band of the Ichimoku cloud. Of course, this is not always guaranteed. There is a risk of you missing out. Zooming out on the monthly chart, you'll see that the price has continued to remain above the Ichimoku cloud, so it has had a very healthy growth. However, this is the catch. On the weekly chart, the Starbucks stock is still below the Ichimoku cloud. This is where things get a little bit tricky and gives me an idea that we may see another crash coming. Of course, putting this together with the COVID-19 situation everywhere but China, this is actually even more of a valid situation. Although in the US, Starbucks has been providing drive-through services, so their business is not completely shut down, but of course, it has not been optimal. For investors with lower risk tolerance who rely on dividend stocks, Starbucks does pay a dividend payment. It's not that much. It's 2.26%, which is not that bad either. Their earnings are just coming up on April 28th, so we could see a bit of a volatility, which could create a perfect situation if you set your buy limit orders early, if we see the volatility and if the prices do in fact go back down if they miss the expectations. Their beta is 0.72, which puts them in a low risk category from a fundamental point of view. However, as I said, because of the COVID-19 situation and because of all the unknowns that we literally nobody knows when this is going to completely go away, and we keep getting conspiracy theories about it, there is definitely risk that we could see another pullback in the Starbucks along with other stocks, which could provide an optimal buying opportunity. As I mentioned before, I invest in Starbucks not only for exposure to the restaurant industry, but also to real estate, which is a little bit weird, I understand. It is still not on my top 10, but it is among my favorites. Now I'd like to hear from you. Have you invested in Starbucks? Did you invest when the markets crashed, or did you invest before? Are you looking to hold Starbucks long term, or will you take profit when it reaches the all-time high levels at around 99 and 100? Go ahead in the comment section and let me know. Also, let me know which stock you'd like me to cover next time. If you'd like to get my full analysis of all of my portfolio, make sure that you check learn.investdiva.com/yes to see how you can join the premium investing group or the PIG for free when you become a member of the Make Your Money Work For You Power Course. Thank you so much for tuning in again, and I'll see you in the next video.